All right, so last week we covered a little bit about these interest rate hacks, and this week we're going to go a little bit more into what a permanent buy down is. So today we're talking about the benefits and the drawbacks to a permanent buy down as opposed to a temporary buy down. Now, as always, welcome to the Home Loan Channel. I'm Jake from Home Loans, and I'm here to talk to you about anything and everything having to do with the mortgage market, from interest rates to house prices to market updates. But today we're going to be talking about the idea of a permanent buy down and why it can be helpful for you. So let's recap. What is a permanent buy down? Now, a permanent buy down is going to be an interest rate buy down. You can use your own money to do this, or if you get a seller's credit, you can use some of their money to do it for you. Now, this is going to buy down your interest rate permanently over the entire length of your loan. So if it's a 30-year mortgage, you're buying down your interest rate the entire 30 years. Now, for a little more of an explanation, let's do a quick example. Now, again, I never quote anything on these videos, so we're just giving an example based on some of the things that are happening in the market right now. So let's say you have a $500,000 home and you offer full price for it. So you offer $500,000 to purchase this home. Now, for this example, we're gonna go with a 10% down payment. So you're offering on a $500,000 home, you're putting 10% down, which is $50,000, meaning your loan amount is $450,000. Now, with rates where they're at today, kind of a little bit everywhere, we're just gonna give the example at a 6.5 interest rate. Now, again, this isn't a quote, just for examples purposes. We're doing a 6.5 interest rate on a $450,000 loan. Now, with this monthly payment, once you calculate taxes and insurance and everything else, we're looking around $3,600 to $3,700, depending on your mortgage insurance, your homeowner's insurance, and taxes, everything like that. It's gonna come somewhere around $3,600 to $3,700 for this example. Now, let's say you decide to take that same $50,000 and you do a slightly smaller down payment. So instead of putting the $50,000 down, you're putting $40,000 into it. And you decide to use that last $10,000 towards your interest rate. Now, on this house price, in this scenario, again, not always going to be like this, but $10,000 is going to buy down your interest rate about 0.75% or 0.75. So now, instead of having a $450,000 loan amount at a 6.5%, you're looking more of a $460,000 loan amount at a 5.75%. Now, your new monthly payment, even with lower down payment amount because of a 0.75% lower interest rate, is now looking around $3,450 to $3,500. So even with less amount down on the house, but a lower interest rate, you're actually paying less monthly than you would be if you did $50,000 with no rate reduction. So this permanent buy down has the option in this scenario is saving you about $170 a month. Now take that and multiply it. If rates don't go down and you have the next 5 years in this mortgage, you're saving thousands of dollars by doing this permanent buy down up front. Now, what I like to do is I always calculate it out, because if you're spending $10,000 to save $170 a month, how long does it take you to recoup this money you paid up front in your monthly savings? And for this scenario, you do $10,000 divided by that $170 a month, and it's going to take you 59 months to make back the money that you spent on this. So if you refinance before that 59 months, which is going to come out to just about 5 years, you're losing money on this transaction. But if you stay in your current mortgage that you bought down for more than 5 years, technically you're saving money long term. Now, what are the biggest benefits to these programs is that you can get your buy down paid for by the sellers, especially in this market. Now, we're not in a buyer's market by any means because of inventory, but we are not nearly in the same seller's market that we were a year and a half ago, where people were having to put in over asking price and making dropping contingencies, dropping their inspections. You're really set up as a buyer to be able to ask for this now. Now, the biggest benefit to all of this is that almost every time I do a loan application, I get asked the question, how much more of a down payment do I need to bring in to lower my monthly costs? Now, in this scenario, you technically don't have to bring in any bigger of a down payment. It's going to do more for you in the long run to not bring in a bigger down payment, but to use your money towards rate. Or my favorite scenario is you keep your down payment at what you were planning on, and we figure out a way to get the sellers to pay to buy down your rate, saving you money long-term and not requiring any more money from you upfront. Now, obviously, you have to have a good realtor in order to negotiate this. You might even be willing to go over the asking price on the house to try to get the seller's credit put back for you. But even adding to the home price and adding to the offer can possibly lower your monthly payment. But don't take my word for it. Go talk to your loan officer, have them run some scenarios for you, see if this is something that would work for you. Now, to wrap up today, my next video is going to be focused on temporary buy downs as opposed to permanent and the benefits of that. So stick around next week as we jump into temporary buy downs. But for now, thanks for watching. Please go ahead and click the like button, subscribe, or leave a comment below. I'm going to answer everything. And if you haven't yet, go follow me on Instagram, TikTok, or anywhere else. I'd love to connect with you and see what I can do. Last but not least, if you're in California and you want to fill out a loan application, my link is right below. Go ahead and click on it. Go fill it out. I'll reach out to you personally and we can get started on the conversations of what does it look like for you to buy a home. And in this case, what does it look like if you were to get? Now, lastly, if you're in California, go ahead and click on that link right below. Go fill out the app. I will do a pre-approval with you. I reach out personally and talk to you, go through options with you, and I can walk you through what a permanent buy down could look like for you right now in this market. Thanks for watching. I'll see you next time.